before you place any trade in Forex, you need to understand these three things. Number one, you need to understand what we call pips. Number two, pipettes. And lastly, you need to know what we call lot size. You see, these three things are very, very important in Forex trading because they determine how much you make, how much you lose, and how you control your risk. So you can't really do without these three things if you actually want to be profitable in this industry. So without wasting too much of your time, let's dive into the video. Alright guys, let's discuss about pip, pipette, and lot size. So what is a pip? The PIP stands for points in percentage, and it is the smallest price movement for most currency pairs or forex pairs. Now let's take a look at this example over here. Let's make use of our Euro US dollar as our currency pair, and this is the quoted price for the Euro US dollar 1.14030. But how do you identify your pip and pipette from this quoted price? Now, we have 1.14030. The fourth number after this decimal point is your pip, while this fifth number after this decimal point is your pipette. Now, let's take a look at this movement as an example. The price moved from 1.14030 to 1.14040. Okay, let's forget about the fifth number after this decimal point. Let's forget about the fifth number so you'll be able to understand what pip is. Let's discuss about this pip alone, the fourth number after the decimal point. All right, from 1403 to 1404, that is just a single movement, right? From 3 to 4. That's one pip. Now let's take a look at this second movement. The price moved from 1.1403 to 1.1413. The difference between this and this is just 10 movements, right? So that is what we call 10 pips. So from 1.1403 to 1.1413, that is just 10 pips. So that is how you identify and calculate your pip. Now let's talk about pipettes. A pipette is a fractional pip. It is 1/10 of pip. Most of the time, I don't really care about this pipette. What I really focus on is pip. But nevertheless, you still have to know what pipette is all about. Now, just like what I said earlier, pipette is the fifth number after the decimal point, while the pip is the fourth number after the decimal point. Now, let's discuss about lot size. Lot size determines how much each pip is worth, or it determines how much money you gain or lose per pip. We have three main types of lot sizes. We have the standard lots, we have the mini lots, and we have the micro lots. These standard lots, it means you are buying or selling 100,000 units of the base currency. The mini lot means you are buying or selling 10,000 units of the base currency, while the micro lot means you are buying or selling 1,000 units of the base currency. Now, how do you now determine the value of a pip? Now, let's use Euro US dollar as our currency pair, and this is the quoted price movement. The price moved from 1.1403 to 1.1404, which is just one pip. If you should minus 1.1403 from 1.1404, it will give you 0.0001, right? Which is also known as one pip. But how do you now know the value of one pip? Let's assume that you are trading a standard lot size, which is 100,000 units. 100,000 units multiplied by 1 pip, it will give you $10. If you are trading a mini lot size, which is 10,000 units, now 10,000 units multiplied by 1 pip, it will give you $1. If you're trading a micro lot size, which is just 1,000 units, 1,000 units multiplied by 1 pip, it will give you 10 cents. So if you are using a standard lot size to trade, always have it at the back of your mind that 1 pip is $10. If you are trading with a mini lot size, 1 pip is $1. If you're trading a micro lot size, 1 pip is 10 cents. Now, if the price moved from 1.1403 to 1.1404, that is 1 pip, right? If you use a standard lot size, that is, you are in $10 profits. If you use a mini lot size, it means you are in $1 profits. And if you use a micro lot size, it means you are in 10 cents profits. But if the trade is going against your prediction, it means 1 pip is equals to minus $10 if you are using a standard lot size. If you are using a mini lot size, that is minus $1. If you are using a micro lot size, that means minus 10 cents. I hope you get that now. So let me show you a practical example of what I'm talking about. Let's look at the charts. Even without anybody telling you what is going on this chart, you should know that the market is pushing to the downside. The market is actually pushing to the downside. So I should be looking for a sell opportunity. So now let me go back and click on this new order. All right, since we won't be entering with market order, I'm going to click on the pending order. So now we are looking for a sell position because the market is moving to the downside. So I'll just click on this sell. Then I will enter the price. I will enter the preferred price. Before I enter the price, let me quickly look at the chart and look for a sell opportunity. All right, I would prefer to enter around this area, around this supply zone. Let me push this pending order here. All right, to enter around this supply zone, the price is around 1.15346. Okay, now the price is here. If you don't want to use this, you can actually type in the price you want to enter. 15347. Anyone. Now let's discuss about order volume, which is also known as your lot size, the lot size you want to use for this particular trade. We discuss about standard lot size, mini lot size, and micro lot size. And for our standard lot size, it starts from 1.00, right? 1.00. You can just write 1. So now, immediately I write this 1. As you can see down here, it says I'm about to sell 100,000 euros. If I should use a mini lot size, which is 0.01, 0.1 for mini lot size, which is, as you can see down here, it says I'm about to sell 10,000 euros. But if I should use a micro lot size, which is 0.01, it says I'm about to sell 1,000 euros. Now, for this $1,000 accounts, I'm only willing to risk just 1 to 2% of my accounts. So let me use a mini lot size, which is 0.1. But before then, I must set my stop loss and take profits. so that I'll be able to determine the lot size I want to use. Now for the take profit now, where is going to be my take profits? I want my take profits should be around this area. Around this area. Since this is the recent low, so my take profits will be around this area. So for my stop loss, I want my stop loss should be around this swing high. So since I've set my take profit and stop loss, let us look at the information we have over here. As you can see, it says 424 points, which is also known as 42 pips. And for my stop loss, it says 153 points, which is also known as 15 pips. If the trade should hit my take profit, I'm going to be making $42. And if it should hit my stop loss, I'm going to lose $15. That is if I use a mini lot size. Let us now imagine that I'm using a standard lot size. For a standard lot size, as you can see here, it says if the trade should hit my take profit, I'm going to make $424. But if it should hit my stop loss, I'm going to lose $153. So as you can see now that this lot size determines how much I'm going to make and how much I'm going to lose. So now for this $1,000 account, I'm just going to risk 1 to 2% of this $1,000, which is around $20, $10 to $20, right? So if I'm to use 0.1, if I'm to use 0.1 lot size, which is a normal mini lot size, so now it means I'm risking $15 to catch $42 compared to when I used standard lot size, where I was risking $150 something. Now let's compare this to a mini or to a micro lot size 0.01. If I use 0.01, it means I'm risking $1.5 to catch $4.24. But I think that is just too small for this kind of accounts. So I'm just going to stick with 0.1 lot size, which is the mini lot size, which is still okay for this $1,000 account. It means I'm risking $15 to catch $42, right? Once you're done with this, then you just click on place order. Bam. So with this now, you've placed a sell limit of 0.1 lot size for this particular trade.
If you found this video very helpful, please don't forget to like, share, and comment your thoughts in the comment section below. And also please don't forget to subscribe so you don't miss out any of our weekly trading tips. In my next video, we are going to discuss risk management. Risk management is a very important topic in the Forex industry. So guys, see you in the next one. Bye.